All right, so here we just finished with our adjustments of the coffee cups. So now the next thing we have here is that we received our bank statement. Ooh, yay. And let's see what happened here. So we received a bank statement from the Main Bank of Nevada, right? So here we only have this column here where we had fees and charges. So the first one was a service charge of $50. And then here is overdraft charges, which is $118.30. And of course, we also wrote a total of 5 NSF checks, which if you look down below on June 22nd, okay, you overdrafted the bank for over for $4,211.85. And on June 23rd, you overdrafted by $2,240.73. 22% interest was charged over draft protection fee. And of course, NSF is going to count $25 per check that we wrote with insufficient funds. So in this case, we wrote a total of 5 checks out, and now we racked up a total of $100 worth of fees. So how am I going to journalize this? This right here is automatically taken away from your bank account because this is your bank statement. They're not going to ask you to write a check to themselves. So they're going to automatically take it out from your checking account. So in this case, how am I going to journalize that I have to pay for these service charges?
Okay, so you said they're going to be taking the fees automatically, right?
Correct.
And I'm assuming that is from our checking.
Correct.
So checking should be one of the accounts.
Correct. In this case, we're decreasing our checking account, so that one's going to obviously be a credit. So what's going to be my debit?
See it, bank fees?
It would be bank fees, yes. So checking for 10100, and then it's going to be your bank fees. So if you check out your chart of accounts, you have that under account number 60,100 that says bank fees. Okay? So 6,100. And how much in grand total is going to be my total amount of fees that I have to pay?
268.30.
268. What was that?
268.30.
268.30 is going to be my total fees that I have to pay. So what note am I going to make here?
Bank fees. Overdraft charges. Bank overdraft and service charge.
Good. Overdraft charges and SF fees and service charges. Okay. Once again, you don't need to write a check the check from the checking account to the actual checking account, right? That makes no sense. So they automatically take it out automatically. So just like every fee, right? It should automatically happen the day that you wrote that NSF fee, right? So they charge you that same day. So in this case, there you go. All right. So now we got to go to our ledger to update our checking account. Okay. First things first, let's go to our operating expenses under bank fees. Right, here we are, bank fees. Now, this is where you can be specific, saying that my service charge was $50. Overdraft protection was 22%, which came out to be $118.30. And then NSF was for 100. Okay. General 22, and this was for a total of $268.30. So now we have to go to our checking account. So we have to update our checking account because they automatically took that money out. For a total of $268.30. So what is going to be my new total balance in my checking account?
It should be 13,425.
13,000. Oh, hold on. My formula did not go through. 13,425 and 38 cents.
Yep.
Excellent. Good. All right. That is it for that one. Right? In this case, right, we did not receive a bill, so therefore we don't need to update our subsidiary ledger for any reason because we don't get accepted. We didn't have a bill to pay. In this case, even though we received a statement and it says that we collected X amount of stuff, let's take a look at our subsidiary ledger. So that was the main bank, right? Main bank. So here we got approved a line of credit for $10,000. Interest rate is 22%. Compounded daily. Right here we got a truck loan. So in this case, right, you can put it in here and make that you paid at the end of the month. But in this case, that's just information that we're added in there. But at the end of the day, it's automatically taken out of our checking account. So is it useful to put this in here? You can make it like a June statement, but technically it's not really necessary just because at the end of the day it's taken out of your checking account regardless. Now, again, if you want to keep track, a really good track record of that bank statement saying what the overdraft protection was, etc., you may do so. But in this case, I don't have to, because at the end of the day, it's going to be zero no matter what. And it's automatically taken out from my checking account anyways. It's not like I owed it and then paid it. All right? Because in this case, it never really, what is it? When I received the statement, they already took it out without even notifying me. So in this case, this is meant for accounts payable accounts, right? If you do end up making an accounts payable, but you do end up paying it, right, at time of service, then you should definitely keep record of it. But in this case, right, the bank statement is not a bill. The bank statement, it just tells you what your account balance is. So that, in other terms, also reflects here. You didn't make a payment to your bank account because they charged you and took it out of your account automatically. So in this case, you don't owe the bank anything because they already took the money out from your bank account already. Okay? And once again, a bank statement is not a bill. Okay? You're not going to make a payment to your bank. That makes no sense. Okay? So you don't need to add it in here, but it is crucial information, at least, that you know that when you made the agreement of the overdraft protection, the line of credit, it's going to charge you 22%. So that is all that this note pretty much tells you, is that where that money is coming from is going to be calculated based on 22% of your amount that you owe. Okay. All right, so let's see here. Let's see what happened next. Then it says right here that you printed your credit card statement for June from the National Bank website. So let's take a look at what the National Bank has charged us. See? So here we are, right? You have your statement date, which is the 6/20, or sorry, 6/30. The current balance is $1,885.89. Right? Interest was 18%, which is an annual APR. So that means you only got charged like 1 point something percent. So in this case, right, because I currently owe $1,885.89, they charged me a total of $28.29. And your current total balance is going to be $1914.18. Okay. Now it says here that the due date is going to be on July 10, and then your minimum payment is only $50. Now here is one thing that you need to know when you receive a bill like this, because if you're going to be receiving or recording the bill, the most important thing is that you're not going to record it for the total amount, because at the end of the day, you have the option to pay less than what you owe, and you definitely don't want your account balance to reflect the amount that you owe, because that will drastically change the next time you make your payment, right? Because that's the tricky thing about credit cards. Your statement may show that this is what you owe, but at the end of the day, your current balance is always going to change on the website, because you're always going to be charging your card, and the calculation for the interest is going to be recalculated. So in this case, right, if you do end up recording your credit card statement or your credit card bills, you need to record it based on the amount that you're actually going to make a payment for. So in this case, right, the assumption here is when I'm going to record this, I'm going to record that I'm going to make a payment for the whole entire amount. Now here's the thing, here's the catch. I never said I was going to pay now. I can always choose to either pay online, or I can actually write a physical check. In this case, I have a statement due date. So therefore, I can pay on the 7th of July. All right? Now let's read this little note here. It says right here that record this bill. So we are recording this bill. Assume that you will be paying the balance on the due date. Okay, use interest payable to record or to reflect the interest accrued for this transaction, right? Because in my books, right, I owe the Visa payable for 1,885.89. However, that doesn't include my interest. My interest is going to be considered another liability that I have to pay because that was my responsibility. That was the agreement terms that I said I agreed to. This money is separate than what you actually owe for using your credit card. It's what you owe the company for using the credit card. Okay, for letting you borrow that money, for letting the credit card company pay in advance for using that credit card. Okay, so in this case, we need to use interest payable because one, we're not paying it yet. Right here it says that we are making the assumption that we will be paying on the due date. Okay, so therefore we're going to pay off the entire bill on the due date. So how am I going to record this transaction?
Would you debit Visa payable and interest payable and then credit checking?
Okay, so we're not making a payment yet.
Oh, we're just recording the bill.
We're just recording the bill, correct?
Hmm.
Okay, so I'll go ahead and give you that you just were correct for the very first account is that you will be debiting your Visa payable account. Now the hint here is that we are recording a bill.
Accounts payable?
Amounts payable.
Good. Okay, you will be using an accounts payable because in this case, right, I'm basically replacing a liability with a liability. But in this case, I'm saying I'm going to make a payment to the entire amount. So that means I'm going to put this as what I owe. Right? It's something I'm going to make a payment soon for.
Well, you're not at the bottom says use interest payable. So we gotta use that account too.
Yes, we have to use. Which is what account? What account number is this?
27,500.
27,500. Hold on. I'm missing something here. I'm missing a note here. this was a section that I forgot to include, that the interest expense, okay? You're going to treat the interest expense as a bank fee, right? So because you need to record that not only did you receive a bill, but that you're going to be owing for the interest, which is right here, interest payable. However, you need to reflect that in order to have an interest payable that you owe, right? Because we're not paying it off yet, you need to reflect that you need to record that interest expense somehow. And in this case, right, out of all the expenses that you have in your list, which one's going to make the most sense?
Well, you said that you missed the bank fee, so I'm assuming that's going to be kind of, I see it as a contra account of the interest payable.
Yes. Okay, okay, so this one is the old one. So in this case, we're going to recognize that interest expense as a bank fee because that is something that we are obligated to pay this bank for because we collected interest on top of that. So this is 6,100. Accounts payable is 20,000, and interest payable is 27,500. Okay. So now let's go ahead and record our numbers. So I have 1,885.89 for my Visa payable. Okay. I have the interest for $28.29. So therefore, I should owe a total of $1885.89 for paying off my credit card, but at the same time, I also owe interest for $28.29. Okay? So when you make a payment, right, what happens is you're going to decrease your accounts payable and your interest payable, right? And you're going to write a check out for, or if you're doing an online payment, those two things that you owe are going to disappear. Right? So good. I think it's bank fees. Right? And what's my note going to be?
Can it be Visa Gold June payment? Or Visa credit card June payment?
Yes. But in this case, it's not a payment. What did I do?
Recorded a bill?
Mm-hmm.
Well, how about Visa credit card June bill?
Good. So, National Bank Visa, credit card, or I guess could do CC for short, bill. Okay. Now, do I have a billing number? My other page, I do have it. In this case, I didn't include it, so there is no statement number here. So that's fine. You can leave it as is. Okay. So what is going to be? Okay, so now we're going to go to our ledger to update our accounts. Okay. So first thing we have is our Visa payable, which is our liabilities. Okay. It is June 30, and then you could say received bill for June, General Journal number 22, and we're going to debit Visa payable for 1,885.89, which brings your Visa payable account to be 0. Okay. I'm going to head over to my bank fees. Okay. Bank fees. And we have June 30th. And you could go ahead and write National Bank Visa Gold CC interest 18% APR. Okay. 22nd journal. And we're going to debit the account for $28.29 to bring your total bank fees to be
I got 296.59.
$296.59. Good. And then last but not least, let's go ahead and update our accounts payable, right? Because we transferred the bill over. Received bill from National Bank Visa Gold credit card, right? Because we're planning to pay the whole entire amount, right? So we're going to record the 18,885.89. So now that I owe this amount, right? What is going to be my total account balance?
I'm sorry, what account are you on now?
I'm on accounts payable.
Okay.
5771
5771.10, right? So again, I'm recording a bill. I'm transferring that I no longer gonna have my credit card anymore, or in this case, I'm not closing it out. I'm just transferring the amount over and saying I'm gonna make a full payment for this. Okay. Last but not least, we need to go down to our last account here, which is our interest payable account, to go ahead and update this. So interest payable, here we are, interest payable. Received bill from National Bank Visa Gold credit card. Okay. Well, then you should also make a note that the interest is 18%. General Journal number 22, And we're going to credit because we owe $28.29 to the National Bank Visa credit card. Okay. So now in this case, right, here are a few things that you can get away with this. If, for instance, that you want to make a payment, but you choose to pay the minimum payment, you are not obligated to record this bill. Okay? Because the idea here is that if you're choosing to pay only $50, right, then you don't need to record the bill. And the day that you actually make your payment, that's where you record your interest expense and you make your decrease into your Visa payable instead of making it an accounts payable, right? You pay your Visa payable directly and you take out the interest directly through interest expense, and then you actually make a payment through your checking account. Now that is only in condition if you are, if you received a bill and you're planning to pay the minimum, or you're not planning to pay the whole bill off. In this case, I am paying the whole bill off. So therefore, right? Therefore, if I'm paying the bill off entirely, then I have to record the bill and record the interest on here. Now, if you guys remember, or if you guys remember from way back when we were talking about how interest is calculated, right? Every payment that you make, you're going to be covering the interest first, and then everything after that is going to go towards your actual principal. So if you made your minimum payment, you would pay off your interest expense first, and whatever remaining is actually going to go towards your principal. So in this case, right, if you were to record the payment of making a payment to your statement, right, it'd be reflecting completely something different. Okay. All right. Any questions there? Any questions? No?
Are we going to be recording that, or you just teaching us something?
Oh, am I going to be recording it into our where? Into our ledger?
Principal or all that, yeah.
So, in this case, we didn't make a payment yet. So in this case, I'm just recording the bill. So, yes. So in this case, I'm not making a payment. So it's not going to be recording that we make that interest expense and Visa payable. We're just transferring the information to record the bill.
Okay.
Mm-hmm. Okay. So because we received a bill from National Bank, we are subject to have to record this bill into our subsidiary ledger. Okay, so June 30th, right? We need to make sure that we indicate the, hold on, we're on main bank, my bad. I have to go to National Bank Visa credit card. So NOP, here's National Bank card. So here, now we are finally going to receive our bill for the first time. Okay, so here we were able to get the credit card approved. So now I'm going to go ahead and put the transaction down below so that we know what happens now. So now that we received the bill, right, we got hit with 18% APR interest, and it says bill due every 10th of the month. So in this case, invoice number, we don't have one. Post reference, we received the bill on the 22nd journal. Right, terms. Okay, in this case, we don't have terms because it is what's called a date specific term where it is due every 10th of the month. So in this case, due date is automatically going to be June 10. Obviously, no discount due date, so excuse me, wrong one. So there's no discounts when you're making a payment to your credit card, obviously. So it's going to be in your due dates, July 10. Prepaid, no prepaid yet. The invoice amount is going to be for the full 19. Let's see, what was it? it's going to be for the full 1914-18, I believe. Yes. For the 1914-18 is going to be your total bill. 1914-18. Right? And we didn't make a payment yet. So therefore, that's what we owe. We owe 1914 here. Right? Now, I guess in the note, what you could do is you could actually explain what the total principal is. So I guess you could say principal, which was what you owed, which was a total of 18,885.89. Then you could say 18% interest, which equaled a total of $28.29. Okay? You could be that specific if you want to. Okay. So here we recorded a bill and we will pay it on its due date.
Can you give me 1 minute to catch up, please?
Yep.
Thank you.
Mm-hmm. Right. Let's see. Let's see what happened next and see if we might have to stop after this one. Okay. So then we received a bill from my bank for the truck loan, right? Because it's due every 5th of the month. Okay, so here I received a notification from the Main Bank of Nevada loan statement, right? We agreed that we were going to make the payment as soon as the next accounting the next month, right? It's effective immediately. So here we have statement date, okay, 6/30. Number of payments, right, left, right? We still have to pay 36 payments. Okay, so here's your total account balance, right? We took the loan for $29,221.90. Okay. However, because we were subject to 3% interest, right, for $73.05, right? Our current balance is now $29,294.05. Actually, hold on. Give me 1 second real quick. Okay. So there we go. I have received another bill for this loan payment and the total now a current amount due is now $29,294.95. Okay. Here your number of payments left is 36. The due date is 7/20. And again, the minimum payment is $849.81. Now again, if you guys remember, payments are non-negotiable, right? You cannot when they give you the amount of payments that you have left, this is the total amount that you have. Now, yes, you can pay more if you want to pay off your truck loan a lot quicker. Yes, you can, but you can never pay below the amount because you agreed that you're going to make these payments every month. So in this case, this is one of those where you cannot get out of, right? You have to pay the full $849.81. However, the due date is not until the 20th of July. So in this case, I'm not going to make a payment yet. So then, here we're going to record the bill. Excuse me. So here, let's record the bill. Okay. How am I going to make record this bill for the car truck loan? Anybody?
Is it similar to the one above? So
Yes.
instead of a Visa payable, we can do truck loan?
Good.
We're also paying interest on this one, correct?
Yes. So in this case, the interest is going to. Oh, I forgot. You have to leave a line below it. Right? Because in this case, the interest is separate from your actual truck loan itself. Right? It's not part of your principal. It's a completely separate extra charge that you have to make a payment to the actual bank that you made a loan to. Right? So in this case, truck loan. But yes, so the truck loan, as we know, if we're making a payment of $849.81, therefore, in this case, I do owe the separate interest. However, this is where I actually have to calculate the difference, because in this case, if I'm making a payment of $849.81, that is including the interest that we are getting charged, right? Because in this case, this is already pre-calculated with interest included.
Oh, sorry, I was typing. I didn't hear the last. So are we going to use interest payable or not?
Yes. We still are using interest payable, but the only thing is that the amount that you are going to be writing off your truck loan must be calculated.
Okay.
So would it be 776.76?
Okay, how did you get that number?
I took the 849.81 minus the interest 73.05.
Good. So 849.81 minus the interest of 73.05, which gives you the 776.79, right? And then obviously this is going to be $73.05. Good. That's correct. So in this case, how much do I actually owe? I'm going to make a payment to the actual truck loan for $776.79, while I pay the interest for 73.05. So, oops. Okay, I just want to make sure that I did my calculations correct here, that they do equal the 84981.
Oh,
No, I made, okay, that's a typo. 84981. Okay, so I made a typo here. So what did you get? 77679, or what was it?
7.6. The pennies, 776.76.
Okay. There you go. Perfect. 77676 is what you're actually going to be paying into your actual principal, while you have to pay the $73.05 to interest. Okay. So, what's my note going to be here?
Main bank truck loan bill for June.
Okay. Main bank bill for truck loan. Okay. For June. For June. Okay. Good. So then, of course, let's go ahead and update our ledger. So first thing that we have is we're going to reduce our truck loan. And then you can even say this is payment number 1. Right? This is the very first payment. And this was General Journal 22. And we're going to debit it for 776.76. So then what is my total now amount going to be?
I got 28445.14.
Oh, right. I didn't put the formula in there. Let me do that again. Here. I'm in the wrong account. There you go. So up 1, plus your credits minus your debits gives you 28,445.14. Good. Next one here is bank fees. So here we are, bank fees. Okay. Main bank truck loan, 3% interest APR. Okay. General Journal number 22. And this time we're going to be increasing it by 7305. Okay. So what's my account balance going to be here?
I got 369.64.
369.64. Good. Okay. Then making back to our liabilities, because now we need to record the bill, right? That we are going to record that we owe for the truck loan this much amount. truck loan. Okay. 22nd journal. And we're going to increase it by 77676. Right? So how much is that going to increase my accounts payable?
$848.
654. You said 8?
No, I put a wrong number. Hold on. 76. Seven, seven, six. Yeah, 6547.86.
Perfect. Okay. And last but not least, we need to update our interest payable because, again, this was interest collected for the truck loan. So here we are, interest payable. It is now 6:30. And let's see, you could say received bill from main bank for the truck loan, which is 3%. General Journal number 22, and it's going to be increased by 73 and 5 cents. So then, what is going to be my total account balance?
101.34.
101.34. So here, that's how much interest we're paying for both the truckload and for the state or for the credit card that we own. Okay. All right. Last but not least, right, that was the last thing that we put in our journal. So we must go ahead.
Give me 1 second because got 101.37 and you got 101.34.
Mm-hmm.
And so we have 20.29 and 73.08.
7305.
Okay, 101.34. Thank you.
So, last but not least, we need to update our subsidiary ledger because this time we actually received a bill for my truck loan. So, I have to go up one account or one table here for the main, or actually two tables for the main bank of Nevada. Okay. I received a bill for the truck loan. So, you could say received bill for truck loan. Then you can also write your principal, or I guess you could say interest. 3%, which was $73.05. Okay. So in this case, right, because we received the bill, the due date, or here, so General Journal 22, due date is going to be July 20th. Now, this is where you have to, with the interest, right, because you're being billed, you need to tack on this extra payment, or this, not payment, you need to tack on this extra invoice amount of $73.05. Okay, so then it reflects what your account balance is on your actual statement, which in this case tells me that I owe now in grand total, which this is supposed to be equal sum, that I owe a grand total of $29,800 $294.95. Okay. It's important that we do put this in there because here I've already recorded that I owe main bank for the loan for $29,221.90. When I received a bill, I got hit with an additional interest of $73.05. So then the next line, if we do end up making a payment, we just pay for the $849 and it's just going to automatically calculate your grand total of your bill that you owe. Okay, so this is how I'm going to keep track of how my bill is going to work, right? In this case, I don't have the billing information, but at least this way, when I received a bill, I got a new invoice saying that I owe an additional $73.05, right? Where opposed to the credit card, right? The credit card, we never started out with an account balance, right? Instead, we started out with zero. So in this case, we need to tack on the amount that we owe and the interest into one column because in this case, right, the condition is that I'm going to start at zero at all the time. Every time I charge my card, then I'm building up an account balance. In this case, I already owe the 29.21.90 because that was my loan. And now I'm getting hit with interest, so every time I receive a bill, I'm always going to increase it with my interest and then I will decrease it with my overall payment. So that's the difference here between treating it at when you record the bill, but on the journal, it's going to act the same, similar, right? Except obviously, if you're going to make a payment for $849, then a part of it's going to go to the principal and a part of it's going to go to the interest. Okay? So there we have it. Any questions here for this right here? This bill right here.
No.
Okay. All right. So it is exactly 11:30 and this is where I'm going to stop here. Okay? So when we come back to this, we're going to start off with our petty cash fund. Okay? So if you don't have any extra questions, you guys are free to go. I'll see you guys tomorrow. Happy Monday.